What's up, y'all? Welcome back to the Mining Pod. For this week's Bitcoin Stock Show, we have Adam Swick, the Chief Strategy Officer of Mara Holdings. Mara just had its 2024 earnings call yesterday on February 26th, and we are recording this on February 27th. So we use the earnings call as a backdrop for this conversation and touch on a lot of what Fred Thiel, the CEO of Mara, said in the earnings call. Specifically, we zoom in on Mara's strategy to continue to purchase energy assets and data centers for its operations. Mara went from 0% to 70% of assets owned and operated under its label, whereas before it was asset light and hosted a lot of its Bitcoin miners. This has had a positive impact on Mara's cost of operations, so we touch on that. We also look at this claim that Fred Thiel made during the call that he wants Mara's assets to be 50% outside of the US by 2028. I asked Adam how that's going to be possible, what are some of the opportunities they're looking at, and we also touch on their relationship with Auradine and whether we should expect to see Mara continue to purchase hash rate from the burgeoning ASIC manufacturer. And of course, we end on everyone's favorite topic right now, AI and HPC. Fred was a little cagey during the earnings call about what exactly they want to do here, but we have more guidance from them and from Adam on what their plans here would be, if any, going forward. So without further ado, enjoy the show. Hope y'all like it and have a great week.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com. Adam Swick, thank you for joining the Mining Pod, man. How you doing?
Great. Thanks for having me. Always a pleasure to talk Bitcoin stuff.
Yeah, absolutely. And a lot of big news for Mara. Y'all just had a pretty strong earnings call yesterday for 2024. Just a few kind of high level notes from that. Total revenues for Q4, 214.4 mil. Cost of revenue was down. Well, looking specifically at mining and hosting services, 130 mil. And operating income of 341 million. One of the big themes from this earnings call I saw really was related to that operating cost. Mara has typically had a pretty high operating cost, something that Fred actually mentioned in the call in one of his answers. And this is a rough quote, it's not verbatim. I thought this was pretty interesting. He said, "We're trying to grow to be more capital efficient instead of grow to hit a number. We became the biggest, but we haven't been the most capital efficient. We want to spend less on CapEx, less on OpEx, have lower operating costs." And he mentioned the wind farm that y'all purchased recently as being a big driver potentially in the future for some of those lower operating costs and the ability to shift older assets like older machines to that wind farm, tap into cheap power. What have been some of the primary drivers behind Marathon lowering its operating cost over the past year or so?
Yeah. I mean, I think you hit the nail on the head on a lot of those things. And it really has been the ability to some of these sites we acquired in terms of going from 0% of Mara owned sites to now, I think it's around 70% of our miners are at places that we own. And that just, of course, unlocks a lot more control. Yes, it takes more capital to own a site. The asset light model that we refer to was the best way to grow really fast. I mean, look at history. That was a key part of the recipe to Mara being the biggest miner. Grow as fast as you can, but that growth has to be balanced with efficiency. And that's the key focus we're looking at right now. Once you own these sites, there's no longer, at hosted sites, there's sometimes misalignment of incentives. in this ever more dynamic Bitcoin mining world. You want to do things like overclock and underclock and sell power back to the grid as grid prices are moving more than they ever have before. And when you own your own sites, you have all of those tools in your toolbox. Versus as a hosted site, it's kind of you signed up for a flat per kilowatt hour fee, and the person on the other side is delivering that per kilowatt hour as they promised, and it's kind of plain simple vanilla. But instead, again, if you look through the reports, you'll see some of the pretty stellar numbers coming out of these sites that we took ownership of. It feels like, on the one hand, it feels like we took ownership of them yesterday. It feels like 10 years ago. But in reality, it was kind of like beginning of 2024. And I mean, what that really boils down to is just testament to some of these great Mara people on the ground in excellence in running sites. Another benefit we had of being asset light for a long time is working with a lot of hosting partners and seeing what worked and seeing what didn't work. And so we could try to create the best version of all of these sites, whether that be small things in terms of how you're repairing miners, how you're managing your fleet, to cooling systems, single phase immersion, dual phase immersion. But yeah, I think it's starting to show itself now after a lot of investment in the earlier in the year, and we expect it to only to show itself even more moving forward.
So yeah, how could Mara continue to lower some of those operating costs? So you mentioned 70% of the assets that Mara currently operates are owned by Mara. Or at the beginning of the year, I think you mentioned, or at least the shareholder letter mentions, it was 0%.
Yeah.
What room for improvement is there from that? Like, should we expect to see 100% owned assets going forward into the end of 2025? Or
yeah, it's kind of funny because this world is so new, and so we haven't reached a part of history repeating itself when it comes to Bitcoin mining, because every year is a brand new year, and unlike a year we've seen in the past. And so the first thing that you come to mind when shifting from hosted to owned is you just remove the margin of that third party that was hosting you. So that all makes sense to people. You cut that out. But one of the things that has never been done before really at scale is what you mentioned, like things like the wind farm. Is miners are always aware that they face this pretty intense upgrade cycle when it comes to their ASICs. ASICs are always improving, becoming more efficient. You're in this global war for hash rate and the most efficient wins. And so there is this pressure to keep upgrading your machines. But suddenly now you're facing this question of, what do I do with my old machines? And to be clear, you didn't have this question in 2017 because there weren't really old machines. It was just the S9. But now there are older machines. And so what do you do with them? Do you throw them away? Do you run them and take up your precious rack space making minuscule dollars? Or do you find a place like a wind farm where you can vertically integrate that way? And you read about power prices at the grid becoming more expensive, et cetera, et cetera. But if you own the wind farm, that takes away this biggest variable, which is power cost. It means that power cost is near nothing. And these older machines can run when the wind blows. And when the wind isn't blowing, you don't run them. And it extends the life of those machines, which is something that isn't doable for a lot of other competitors unless you go down that path of owning that wind farm. And so when you ask that question about how much more improvement is there, again, it's hard to answer because Mara is doing things and others are doing things that have never been done before. And so I don't think we know the answer to that question. And we're shooting for zero cost mining. I mean, that's the goal, is to have miners that don't care about Bitcoin price and global hash rate. They're just there securing the network, minding their own business.
Is that, to kind of break down the marketing terms a little bit, because obviously it's a great goal, but I mean, can we even say that that's possible, zero cost mining? I mean, it'll have a cost obviously up front, right? You have to acquire the sites, and even at some of these marginal price sites like a wind farm, there's still a cost to produce the energy. Like, what can you do in terms of actually trying to get to that point? Because I think that, obviously miners want the lowest cost energies possible. And this whole thing you're talking about things that miners have never done before. There are obviously every week in mining, there are kind of new things happening and the business models continue to mature. One of the maturations that I think we continue to see are these convergences of the actual energy assets themselves and the miners. like energy companies will become miners, miners will become energy companies. Is that just basically the idea? It's like Mara wants to basically become an energy company or partner with energy companies so they can get close to that zero cost energy, or?
Yeah, I think you're kind of getting to it. And again, I'm going to choose my words, two thoughts. First of all is the energy at the wind farm. Yes, there are operational and maintenance costs. Like, it's not truly free. However, it's dramatically cheaper than buying power from the grid. And so, I mean, make it up. What percentile of cost do you have to be in for the global hash rate? Again, where it's essentially free. If you're the top decile of energy costs and operating costs, you feel really good because 90% of the network is going to have to shut down before you do. And so that's number one. But obviously the North Star is trying to get to truly zero cost, like you said. And I think that unlock of truly zero cost is feasible. And it's about that word partner that you said. And it's a very powerful world. It's shifting from being a customer and showing up to the grid and saying, hello, I'd like to buy a lot of power, please. And it being a transactional buyer of energy, seller of energy relationship, to instead of us saying, hello, we'd like to buy a lot of power, it's now saying, what problems are you facing? And we're going to solve them for you. Is it a stranded energy problem where you've got a hydro dam in the middle of Africa that has not had the transmission built out yet? Is it that you have an energy generation demand mismatch? Where you're using your grid needs a lot of power during the day, but not at night. Again, at which point we can locate there. Is it stranded or excess molecules, meaning gas, flare gas, which you're literally lighting on fire out at your oil and gas field? And so theoretically, you would be willing to accept, 0.000001 cents for that gas because you were lighting it on fire before. So those are the partnership opportunities where Bitcoin mining is a tool to solve a problem, as opposed to Bitcoin mining being the customer of energy. And there's a very big fundamental difference there. And that's what we have to get the world to understand. And it's the same struggle that I think Bitcoin has been facing for a long time. How do you communicate this to the world? How do you educate the world about Bitcoin? It's a very different conversation if you knock on someone that's been in the oil and gas world for 50 years and you show up and say, hey, I'm a Bitcoin miner. I can solve all of your problems. Let's do this. They're going to say, what are you talking about? What's Bitcoin mining? Versus if you say, what problems are you facing? Oh, you've got gas you're lighting on fire. How about we bring a generator and we bring demand to your oil field so you don't have to truck it out? Is that interesting to you? If we come to you and consume and pay for the gas, that they say yes to. So it's evolving very quickly, but it is achievable, I think.
I like the kind of divergences in business models we're seeing with a lot of these miners, because to speak to your point and to speak to one of the things that Fred said in the earnings call, he said, Mara's view is that grid energy in the US is only going to get more expensive. There's a constriction on it with AI and HPC. Obviously, this is very much in question of how much energy do we actually have to allocate towards these things, and what does that mean for every other consumer on the grid? Other miners in the past or currently, like Riot, are kind of saying, why would I buy the cow when I can get the milk for free, i.e. I can curtail, I can get a lower energy price. Mara right now seems to be saying, well, you buy the cow and then you get the milk for free. The question that I have, though, before we hop on to maybe some international aspirations, because there's a dual level strategy that Marathon talked about in the earnings call of buying assets at home in the US and partnering in joint ventures and things like we've seen in Abu Dhabi, or rather the UAE abroad. But going back to buying the cow, what will Mara do to finance this? And how would you respond to investors who might look at the convert that y'all did last year and say, wait a second, why are you buying Bitcoin with this when you could be using that to deploy it into energy producing assets or mines? And then they look at the shareholder vote that was recently held to increase shares from 500 million to 800 million and say, wait, are you going to dilute us further? How do you look at financing for this? And maybe, I know there's a lot going on there, but what would be the primary financing avenues. And then going back to that convert note, like why use that for Bitcoin rather than for assets for the business?
Yeah. So as you start to move to more traditional assets like wind farms and otherwise, it does unlock a whole other world of financing. If you can approach any big bank or financer investor and say, I want to buy a wind farm. And they're like, okay, I know how to underwrite that. I know how to diligence it. You can't approach every bank in the world and say, I want to buy a bunch of Bitcoin miners like ASICs. We saw a lot of lending markets last run 2021. A lot of lenders got burnt. There was a lot of repossessions, et cetera, et cetera. So it's hard to get financing for your ASICs. And if you do, it's going to be expensive. However, again, the traditional finance world is used to interacting with these things. So again, it's just another tool in the toolbox for us to be able to constantly evaluate what is the best source of funding for this asset at this time, which kind of answers your second question is, this is such a fast moving industry. You're constantly comparing and contrasting what are your potential sources of funds in that moment and what are the potential uses of funds. And this changes day by day in this industry. And we are constantly updating our models and reevaluating, trying to make the optimal decision on both sides. And so, I mean, if you look at the convertible notes, I would argue we have some pretty advantageous terms there that were likely open for a matter of days, if not weeks. MicroStrategy is very good at this in terms of trying to time these things perfectly. You want people to be educated enough where they want to buy into the convert, but not so much where the market is saturated of it. And so these are things we're asking ourselves all the time. The ultimate hope when it comes to acquiring these generation assets is we should be focused on assets where they're uniquely valuable to us. And what I mean by that, oversimplifying, let's pick a random wind farm. You have a wind farm we're going to use round numbers. The wind is blowing 50% of the days, but the grid only needs power 50% of those days. And so, overall the time you're selling power to the grid for 25% of the days, 25% of the days you have power, but grid prices are like de minimis. And then 50% of the time there's no wind. We can show up and if it's more advantageous to sell that electron to the grid, we'll do that. If it's that, but that 25% where the grid price was de minimis or so low, we can then put those electrons into Bitcoin miners, and the 50% where the wind doesn't blow, the wind doesn't blow. But it's, again, improving here. If Bitcoin miners are making 15 cents a kilowatt hour, it's a pretty easy decision to say, all right, the wind's spinning. Here's an electron. The Bitcoin miner will make 15 cents per kilowatt hour. Grid, what are you paying me right now? If it's above 15 cents, you're going to get it. If it's not above 15 cents, it's going to go to the Bitcoin miner. And so having that base load sure thing, 15 cents a kilowatt hour in my random example of round numbers, that makes that wind farm more valuable to us than anyone else. Any other energy trader, investor, et cetera, will just have to model sending every electron to the grid. And they don't have the benefit of this sure thing, 15 cents a kilowatt hour, oversimplifying. And so that's the key unlock here, is finding assets that are uniquely valuable to us.
Big players in Bitcoin mining demand stability, regulation, and trust. That's why NiceHash has moved its headquarters to Switzerland, the country known for its strong regulatory framework and for keeping its cheese locked in a safe. As one of the most regulated mining platforms in the industry, NiceHash provides institutional miners with a secure, compliant, and transparent solution to manage and maximize their mining output, delivering the reliability and performance expected from the best mining pools, along with firmware, monitoring software, and other essential mining tools. Contact a NiceHash representative today to learn why the top Bitcoin miners are making the switch to NiceHash. You can find out more info in today's show notes. And when you contact them, let them know the Mining Pod sent you.
I guess my next question would be then, are those assets typically going to be on the fringes? Do you know what I mean? Wind farm, yeah. You mentioned off-grid mining as well. Would Mara ever consider going into a baseload energy purchase, something like a nat gas plant or a coal-fired plant like we've seen with Stronghold and Bitfarms?
Yeah, it's like a bit of both. On the one hand, you can imagine these things being in the fringes out in the middle of nowhere, and maybe there's a lack of transmission to them, which is causing problems. On the other hand, they could be in super crowded areas where congestion is causing the problem. Still a transmission problem, but it's like lack of transmission versus too much electrons flowing around. And so all of those are potentials, and we're seeing all of those across the country. The energy system infrastructure is incredibly complex. And there's, hype cycles of wind and solar, hype cycles of gas, things are overbuilt, et cetera. And we can step in there to, fix issues that have happened in the past, economically or operationally, which is exciting. Again, to have this, having an interruptible modular load that can go to the source of generation, like that's what Bitcoin mining is. And when you use those words to the energy world, that's what like blows their mind, is they've never had an interruptible modular load that can come to them.
So speaking of the energy world abroad, one of the biggest things in the earnings call that I tuned into was Fred making the claim that Mara eventually wants to have like 50% of its hash rate generating capacity, or just megawatt capacity, whatever metric you want to use, outside of the US. One of the more salient, developments on this front, I think, occurred when Mara announced its JV with the energy company in the UAE. Yeah. And that was made splashes all across crypto Twitter and media and stuff like that, because it was one of the first joint ventures of its kind, and kind of opened up this can of worms of like, where else, we've been focusing so much on the US and Canada, where else can we start looking for energy? Obviously, you also have a agreement in Finland where you're using some of your miners to heat homes and residences. What are some of the opportunities that Mara is currently looking at? What countries are the most interesting to y'all? I know you can't disclose deals that might be under contract currently or LOI, but what should we expect in terms of trying to increase that international hash rate?
Yeah, the quick answer is the world's a big place, and energy is a very important sovereign thing. Dams at the border of countries are often extremely contentious. But energy is an asset that countries really fight over. And so these artificial lines of where country boundaries are actually very important. And every country region around the world is facing different issues. And so that whole pitch that we talked about earlier in terms of us leading with the question of what are your problems and how do we solve it, that's exactly what we're doing. And so in the UAE, very forward-looking country, arguably they call to us saying, we have this identified problem, we think you're the solution. It's the energy generation demand mismatch. During the summer days, everybody's running air conditioning, incredible energy demand. However, at night and for the other not summer months of the year, that demand goes down. You need to build out the generation to fulfill peak demand. Like the last thing you need is somebody not being able to turn on their air conditioner during that hot summer day. So you need enough to fulfill that. But that means it's just sitting idle for 80, 90% of the year. So in that case, we were able to show up, take that 80, 90% of the year, work in a symbiotic relationship with the grid and say, hey, call us when you need us. In a funny way, it's like a substitute of building a gas peaker plant. Is they can either build a gas peaker plant, and when demand is high, they turn on another 250 megawatts of generation, or they call us and they tell us to turn off our 250 megawatts of demand, which frees it up. And so that was like an energy generation demand mismatch. And that's happens in a lot of places. You can imagine it happens a lot in hot places or in places with extreme temperature differences. Other ideas, again, spitballing. There are many regions of the world that have wet seasons and dry seasons. Wet seasons, rivers are flowing, dams are producing tons of electricity. Dry season, they're not. And so this is kind of a less of an intraday energy generation demand mismatch and more like these 6 months versus this 6 months. There's probably opportunities there to locate miners, run for 6 months and then not for 6 months. In a crazy idealistic world, are you just following the wet season around the world, literally moving your miners from wet season to wet season, trying to follow it? That's another idea. In developing nations, you have what we briefly talked about, like just over the whole continent of Africa, a lot of investment, a lot of growth coming here. They want to build out, if you're going to build new generation, do you want to build for the demand of tomorrow, like literally tomorrow? Or do you want to build out the demand for 10 years from now because your country continent is growing so fast? You want to build for 10 years from now. But what do you do with all that extra generation while you wait for that growth over the next 10 years? That's probably an opportunity for Bitcoin miners to come in and happily say, yes, country, continent, we want you to grow and grow into using that energy. Please tell us when to leave. But while you wait, why don't we pay you for it? And again, that like symbiotic relationship. So I don't know, off the top of my head, those are like 3 hypothetical examples. And I'm sure we could spend hours with more, but it's a complex world of energy. And when it's been rare that I've heard like an energy problem where, not to be too short, but where I can't say Bitcoin fixes this. It happens a lot.
The mantra that every Bitcoiner likes to hear. And it really is true with regards to a lot of energy problems and shortfalls of the grid, right? It sounds counterintuitive to people listening in if they don't know anything about it, that this incredibly power-hungry industry is actually really good for grid stability. I think we've seen that play out pretty well in places like Texas and, as you're mentioning, in UAE. I want to zoom in on the developing nation bit. So we covered the Bitfarms and Hive acquisitions currently under contract, where Hive was purchasing an under development site in Paraguay from Bitfarms. There were 2 arguments there. It's a win for Hive because they get a really cheap site relatively, and they get to expand their footprint in a country that has pretty cheap power. There's another argument that it's good for Bitfarms because they get to focus on some of their assets in Pennsylvania, in a jurisdiction that investors and financiers are a little more comfortable with, right? Perhaps they don't want to lend the capital to build out a Bitcoin mine in a country where they can't really accurately price the risk, right? Whether that be geopolitical, social, or what have you. Do you think that, going back to the Africa question, we've seen a lot of buzz about Ethiopia? I believe, according to Hash Rate Index, they've got a map of hash rate that breaks it down by country. It's roughly 3% of the network right now, anywhere from 600 to 800 megawatts. The biggest public miners we've seen active in that neighborhood are Bitfufu, with a huge footprint there. A little bit unsurprising because Chinese miners are flocking to Ethiopia and parts of Africa to look for cheap power. Chinese miners have always been a little more comfortable with stomaching jurisdictional risk, whereas U.S. miners haven't been as much. Do you think that places like Ethiopia and other opportunities in Africa are de-risked enough for U.S. markets and miners to say, okay, we're going to step in here? Or do you think that that's something that's going to take a few more years? They're going to require more evidence that this is playing out in favor of the miners who are operating there?
I mean, this is the question, to your point. I wish it was as simple as just gather the whole world and sort by cheapest energy and go there. There's lots of quantitative things. It's how much is the energy? How much is the electrical infrastructure? Like when you start to pay for this stuff, like transformers, substation build outs. So lots of quantitative and lots of qualitative, to your point, in terms of trying to weigh those risks. Then you zoom out even further, and you're like, all right, Texas has a lot of cheap power and I feel comfortable there. But then at some point you're like, wait, everything's in Texas. We should just have some diversification risk just there. And so that one country that might have seemed risky might actually be good if all my eggs are in one basket. Like the second, diversifying your portfolio, the second thing you add is so valuable. So these are all great questions that we wrestle with every day. To answer your question, the best way we've tried to get comfort there is working with great partners. The UAE is a perfect example. Our partner there is called 02. They're a subsidiary of ADQ, one of the sovereign wealth funds. And so when you go in there to a place where you don't have, at the time when we were entering into the deal, we didn't have any employees on the ground. We do now, but didn't have employees on the ground. Obviously, you're far from an expert in that market, but you know who is? 02, who is on the ground there. And so when you start building in these, we think it'll take us roughly 12 months to build this, but there might be delays, unforeseen things. When you can rely on a trusted partner and incentives are really aligned, that's the reason that site went from contract to like fully operational in 13 months, is that potent combination of Mara being really, really good at Bitcoin mining and our partners being really, really good at navigating the local ecosystem. That reduces a lot of risk. And so there's a reason we didn't just plop down and plant a flag in UAE and saying, we're building a mine here, everybody leave us alone. That would not, I think, have been as successful versus this partnership. And so that's something we really try to think through. And that could be, again, sovereign wealth fund partnership. It could be private company partnership. It could be public partnership with government. But that's a quick answer to one of the biggest ways we've seen to de-risk.
So speaking of the UAE, I think it really hits on a point that Fred made in the call, which is international markets tend to be centrally controlled, whereas U.S. markets, that's roughly his words, whereas U.S. markets are fragmented. Can we unpack that a little bit? It makes sense intuitively to me. You look at Texas and it's an incredibly fragmented market. It's it's like the freest energy market in the US. There are so many like take your pick of the power company you want to try to work with, right? Whereas boys like UAE, nothing gets done there without the stamp of approval from the government, right? What are some of the pros and cons to that?
Yeah, it's a long list of pros and cons. To your point, the US is complicated. You have different incentive structures, you have free markets, you have regulated markets, you have public stuff, you have private stuff. And so con there is confusing. The pro there, I would argue, is amidst all these confusions is opportunity. There's a lot more inefficiencies. And those inefficiencies are opportunities, again, for Bitcoin to fix that. But it involves working really hard to navigate a very complex web to find that. In international markets where it might be more centralized, you know exactly who to talk to, which is great. It's like simple. But the con is you only have one person. If they are anti-Bitcoin, if they have other priorities going on in their life, this might not be the number one thing for them. And you can't turn and go to the next person next to them because there's one show in town. And so it's kind of happening in the United States, even if you look at the strategic Bitcoin reserves, where you have different states talking about it, other states not talking about it, just in terms of how open-minded you are. It happens internationally, like at a country by country level in terms of who's open to thinking like this. Whereas it's the US, it's like a municipality, by state, by federal, by private company, by board of directors level, a lot more complexity. But again, opportunities everywhere. And I think if people all around the world stop having this guttural reaction to Bitcoin mining, like those two words and what they think it means, and instead take the time to understand what are the energy problems we're facing and how does a interruptible modular load that comes to the point of generation, how does that fix our problems? That's very different.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
I want to focus in on just two more things and then we'll hop off the horn. The first is Auradine, which, speaking of opportunity, was perhaps one of the more prescient business developments for Marathon, I would say, because we were starting to see, obviously, threats of tariffs potentially impacting imports to the U.S. And also, we've been reporting on Blockspace pretty heavily on these port holds of ASIC miners from Antminer or from Bitmain, MicroBT, and Canaan. This includes detentions and seizures at CBP port of entries. It should be resolved soon, but it's been a huge headache for a lot of Bitcoin mining companies in the U.S. And one of the biggest themes currently is this kind of reshoring of the supply chains for Bitcoin mining. Unclear what this looks like right now, because currently we only have one fab that could maybe do the trick in Arizona with TSMC, and that's 4 nanometer versus 3 nanometer. And it's also TBD how many of these units will actually be assembled in the US. Maybe there's an argument where you just get the chips from TSMC, ship them to the US, and then assemble the box miners here, or maybe in Mexico or something like that. All that being said, trying to draw, complete the circle around all of these supply chain considerations for Bitcoin miners and really enclose it in the US has been a huge theme. Auradine is at the center of this as one of the premier ASIC manufacturers that is trying to break into the market. It's really like, as far as I can see, it's Auradine, Bitdeer, and Block that really kind of have some of the more serious or have the most promise to break in here. Marathon invested about 35.5 mil, I think, in Auradine a few years ago. And you're starting to receive shipments of these miners. Or is Marathon pleased so far with the performance of these miners? And given the stake that Marathon has in Auradine, what should we expect from Marathon in terms of ASIC allocation from this manufacturer going forward? Like, should we expect Auradine to be their primary supplier?
Yeah, all helpful background for everyone. And to your point, I think there was 2 driving things here. Number one was just de-risking that source of ASICs. If you look back, you just saw that there was one giant player in the room that wielded immense power to change the price of ASICs from $15 a terahash to $80 a terahash over the course of a couple of years. And again, you look at that and you say, this is a major risk to our business, how beholden we are to Bitmain. And so it's not like we foresaw a change in administration, tariffs, and all that. It wasn't that extreme where we had predicted those exact examples, but it was more like, this is a risk. This is a big risk to the business. We need to preserve our optionality. So that was the first thing that drew us to be excited about working with Auradine. And the second thing, to answer your question about how's it going, is one of the reasons we were excited to work with Auradine was to have more influence and say in collaboration when it came to the design of these miners. I think we were used to working in a world where it was, here's the miner. Do you want it? Take it or leave it.
Take what you get, bud.
Exactly. And by the way, a lot of people want it. So convince me why I should sell it to you. Versus really working all the way down to the nitty gritty about how many LEDs should this thing have on it? And when they flash, what should it mean? That was great to have someone ask that and to be able to say, yeah, we've got 300,000 miners, something like that. So here are the pain points we face. Here's what we would really appreciate that LED flashing to help the tech understand what they're supposed to do with it. And so quality, it's so easy to focus on the numbers with ASICs, their efficiency in joules per terahash, their cost in dollars per terahash, et cetera, tariffs, and run all those numbers. But another heavy part is the qualitative component. Like I said, if it has, exaggerating, no LEDs flashing and you have no idea what it means, that's a lot of headaches. When it goes down, you don't know which one is down, et cetera, et cetera. Versus if you have an LED that flashes and you're staring at a wall of miners and you're like, yep, it's that one, that saves a lot of time. Similarly, if you want to overclock and underclock, it's a big difference versus having to set your overclock settings, restart the miner where it has to reboot, come back up, and then it'll enact your new settings, versus Auradine machines where it's like a live time dial. You kind of underclock it and overclock it and it goes up and it goes down. That 2-minute reset is impactful when you're dealing, again, if I have one machine sitting on my desk at home, whatever, a 2-minute reset means nothing. But when you're dealing with hundreds of thousands of the machines, that's material. And so it's going super well on both those fronts, the de-risking front and the design qualitative, how these things are working front. So I'm a big fan of the Auradine team, and I expect really exciting things for this year, given all the macro tailwinds, headwinds. I don't know which one they are.
Depends on who you ask.
Exactly. As well so that's a macro level, but also the micro level in terms of the quality of stuff that Auradine is making. It's all boding very well.
Yeah, most of the miners that I've spoken to are pretty happy with Auradine, which It's pretty impressive to see because we've seen so many ASIC manufacturers come and go and try to disrupt the duopoly and really monopoly that Bitmain holds over the industry. One more note to zoom in on for listeners who might not like fully understand what kind of sets Auradine apart in terms of operations. So you can try to lick the problem of just being efficient and having enough hash rate. Like that's hard enough. And if you're not going to have a good enough hash rate and good enough efficiency, the miners are going to tell you to kind of like walk away. But Auradine really has put a lot of effort into tuning their firmware and making sure that it will respond to mining needs. And one of the things specifically, going back to I think maybe what you're talking about as well with overclocking and underclocking, is Auradine has really advertised that these are geared towards demand response and being able to really curtail your load when you need to. So I just think that's an interesting note for the regards to some of Marathon's aspirations to continue to get into these JVs and operate on these power assets where that's going to be necessary. Leaving Bitcoin mining, just want to wrap up on this question. It's the boogeyman or the golden rabbit, depending on who you ask. AI and HPC. Now, we've seen over the last, I would say, really few months, this whole conversation for Bitcoin miners accelerate. Core Scientific, Bit Digital, Hive, Iron, and Hut 8 were the earliest movers in this, depending on who you ask, right? Like the compute's all different. Hut 8 started in 2022 with a data center that services, a Terago data centers that service healthcare industry applications. And then, Core Scientific has its CoreWeave deal. Bit Digital has purchased a data center in Novum, is really leaning hard into this. But over the last few months, we've seen developments really accelerate with Stargate project, right? $500 billion, pledges to invest in AI infrastructure from the likes of Oracle and OpenAI. It seems like Crusoe and Lancium are going to cash in on a little bit of that money. Cypher also might be looking at some of that money with a $50 million investment from SoftBank for its AI and HPC aspirations. And most recently, Riot has paused Corsicana, the second phase of that build out, to evaluate it for AI and HPC. That was a huge pillar of their earnings call. And now Bitfarms is even saying that they're looking at consultants that are asking, then they're asking them questions. Is this, can we use AI and HPC? Is this something we should look into? I couldn't really get a good read on Mara's direction in this in the earnings call. Fred, just to quote a few things from the shareholder letter and the earnings call, Fred said that we believe Mara is well positioned to support this development. I think specifically on the inference side of things. And for our listeners, inference is like actually using the AI models for daily tasks. Training is when you just have, bukus of energy to actually train the model, get that to work the way that you want to. And that's a different thing entirely. But he said that Mara is positioned to support this development. AI inference requires scalable, cost-effective compute infrastructure, something we excel at. But there were no confirmations that Mara is necessarily moving into this. There was also talk about Mara potentially offering curtailment services for the grid so that the grid can support AI infrastructure when it needs to most. What's going on here? Like, what are Mara's plans with AI and HPC? Is there commitment one way or the other, keeping an open mind?
I think it starts to show you how we're thinking about it. And I mean, you nailed it, because it's so easy to, I feel like people are trying to wrap their heads around it. And so, we could put out a press release that saying like Mara's getting to AI HPC, but you're like, what does that mean? Like, what's actually going on? And then you're like, oh, we're building a data center. And you're like, yeah, but what does that mean? Like, who's going to buy it? What's going to be there? Like, devil's in the details. And I think that's what people are starting to ask questions about. And sometimes the details they find are awesome. And sometimes the details they find are actually terrifying. From that shiny headline of XYZ companies getting into AI HPC. And so I think to kind of play back the things that we're excited about as we've been very consciously watching, learning, trying to figure out how a company like ours can best use our strengths to address the needs of this industry. And so I think we watched a lot of people rush, AI became a thing. We have to create these models. And so there was it takes incredible compute power, a ton of GPUs to build a model, to train the model. And so there was a big panic. How do we get enough power? How do we get enough GPUs? We have to create these models. And awesome world we live in, this stuff happens fast. We had some really awesome models produced. And so literally over the past 12 months, we've shifted from how do we build AI models to suddenly these are useful. And so now we're shifting into usage, which is that inference side of things, which is where we're quite frankly more interested. The other thing expanding on that is not only are we shifting from training to inference because we have useful models that can actually be used now. The other thing is the big evolutions in this space seem to be more about inference. And so it's not about let's train another more intense model. It's about, okay, we trained a model. Now let's instruct the model to think about an answer and then think about that answer more and then double check its answer and then think about its answer. And so notice there, the improvement is not more training. The improvement is more inference. And when you hear the words reasoning models, that's what it's doing. Instead of, in the past, let's oversimplify, it would say, you could ask it, what time is it? And it would just give you the answer. It's noon. Now the inference models are doing more inference. And so you ask it, what time is it? And it's like, all right, what is time? How can I answer this question? I can Google these 3 websites. All right, I'll Google all 3 websites. All right, let's check them all. All right, they all seem to synchronize. All right, now let's produce the answer. And so a lot more thinking went into that inference. That was grossly oversimplified, but you can extend it to a lot of the more AI applications. Is there's more thinking going on. And that's how we're getting better answers today. It's not more training. People are doing more training, but the key unlock is more inference. And so as you understand that the real excitement is inference and not training, that then informs your strategy. Inference, training, let's go to training. Training is take a ton of GPUs, put them in one space. It can be out in the middle of nowhere. You give them some data and they think 24/7, 365 to train the model. And then they say, done, here's the model. Inference is, a lot of people are asking questions from 9 to 5. It's spiky. People somewhat care about latency. Like I don't want to wait days for my response, and I might be able to wait 10 seconds. So that's very different. And so depending on training or inference, that's important. And so our belief is that inference is the big thing here. And that's where we're going to be spending our time and effort. And so you heard about like inference at the edge in our call. That's the idea of trying to use things like our 2-phase immersion cooling to put this stuff closer to the person that's calling the model, asking that question, what time is it? And then similarly, make it up if inference usage is 9 to 5 because everybody's using AI for their jobs. What do you do from 5 to 9 with that power? It's upsetting to the utilities when you show up and say, hi, I want to build a big inference data center. I'm going to use 100 megawatts of power from 9 to 5, and I'm not going to use any of it from 5 to 9. Like they don't want to hear that. If you show up to the utility and say, I'm going to use 100 megawatts of power 24/7, they love that. It probably unlocks cheaper power for you. And so you can run the inference, you can fill in the gaps with Bitcoin mining. And so these are the pieces we're putting together as we're very thoughtfully trying to understand what are we really good at, where is the puck going, and how can we get there, versus let's build a giant data center and jam it through a bunch of GPUs and hope for the best. And hopefully that gives you a little more color.
Yeah, it definitely does. I think it just kind of clarifies as well that if Marathon does make inroads here, it'll be with inference specifically. So last question I have to ask, and you might not be able to answer it. Should we expect an announcement for Marathon in 2025 about moving towards this business line more concretely?
You'll see lots of announcements from Mara in 2025 across a lot of exciting fronts. I hope we continue to impress people. I can say we're doing a lot of thinking and a lot of planning. Again, hopefully this conversation, even those that last question shows that this is not just AI, HPC. There are many subsectors to consider. And so making the right bet and the right investment is incredibly important. And so, I would just say stay tuned. This world moves fast, and we will be sure to keep you all informed.
We'll be trying to keep tabs at the Mining Pod and Blockspace accordingly. Adam Swick, thank you for joining, man. Really appreciate the conversation. Hope you have a good weekend.
Yeah, same to you. Thanks to you.